Yeah, well, that's the first thing that comes to mind when you both say you've got two. Is I was like, you're both far wealthier than me. I'm going to play catch up. I think that's the one thing that gets me really jealous when I see like the family photo of just a big family and they're all happy, and there's nothing better than being healthy and having a big loving family. That's wealth. Yeah,
Yeah.
there's nothing higher up there, and it's something you can't buy either. Like I like the idea that like you can't buy a healthy body. It takes pain and work, and you can't buy a loving family. If anything, more money can detract it.
This episode is brought to you by Covered.io, an options trading tool that we use to generate extra income to free up time so we can pursue projects like this podcast. This is The Covered Call, the podcast where we explore the journey towards true freedom. In each episode, we bring on guests that have charted their own course towards more freedom, more contentment, and more impact in their lives.
Hey, Ferg. Lovis, thanks for joining us on this call. I think it's episode 11. So Lovis and I are calling in from Germany. I think Ferg is somewhere in a special location in Bali. So yeah, we really wanted to talk to him today. He's a super important guest for us because I think he's living the life that a lot of us freedom seekers in our audience aspire to, right? So from what I know, he's an investor, a contrarian investor. He takes risky positions with high conviction. He has a newsletter called Ferg's Finds that that we enjoy reading. He's back. So he's in Bali with intermittent connection. But yeah, so he has his own newsletter called Ferg's Finds. Yeah, so we wanted to talk to him a little bit more today, more on the way he thinks, some of his philosophies, how he's found himself, where he's at. So Ferg, welcome. Thanks for making the time.
Thank you both for having me. It's good to be here, and yeah, looking forward to having a good chat.
So yeah, if we get right into it, could you share a little bit about how you found yourself, just from a very high macro level, how you found yourself living the life you live in Bali? I guess many would say it's an unconventional life. So how did you find yourself there?
Well, it took a while. It wasn't by any means sort of a pre-planned path. I'm from New Zealand, for those that don't know. I'm off a sheep and beef farm. Grew up on a farm in Wanganui, which is, for those that don't know, it's sort of 3-4 hour drive from Wellington in the middle of nowhere. Thought I was going to be a farmer for all the way through the way through school. Even got a rugby scholarship that was agricultural based. So went to a agricultural university down in the South Island, and didn't work out that farming wasn't for me till about the end of my first year at uni, and just realised, like, I'd seen it with my father, who was just super intelligent, but he always battled with it because you were open to so many variables with farming. It was almost how however farming was doing globally was how you were going to do in farming. And if you had droughts, bad weather, you'd just get smashed regardless of how smart you were within the space. And that always stuck with me. And I was like, I just don't see the upside here when you can be the best in your game and you still don't get good results. And so I'd switched then to property, because that was the one place I kind of saw. So my first experience was I had one professor who had retired early buying commercial property. He drove a Maserati, and he was being a lecturer to kind of give back. And I kind of aspired to him. Whereas my main lecturer for agriculture, he was a failed goat farmer. And so I ended up going down that road, got into property development management, did a degree in that, went to Australia, got into asset management there, worked sort of in a corner office in a skyscraper for most of my 20s, and realised everything I kind of aspired to, the sort of big salary, a suit every day, managing my team, got up to 13 people, I hated it. Yeah, I hated being controlled. I hated being told what to do. And also, there just seemed to be you couldn't really get ahead. Like even my last year, I remember seeing my bonus and thinking, oh, that's fantastic. And then when I saw it actually hit the account in Australia, they take over a certain level, they take 50% off you, and then another 10% goes to your super, your pension.
Super.
So you get 40 cents on the dollar. And so I was like, I'm not getting ahead here. So
that's brutal, right? Like, I mean, it's the biggest chunk of your compensation all year, and then you get less than half, man. That's so brutal.
Yeah. And so
it
that
just
was
kills the motivation, right? And this, Ferg, sorry, but you said asset management. What is that? Managing financial assets, or is that property management?
So it was mainly property. So the first job I had was managing a property of like commercial and shopping centres, and then they all got spun out into its own vehicle that listed on the ASX, and so I went across with that and was managing that. But during this time, I was trying to look for a way out. I was like, how can I actually start my own business or create my own sort of cash flow business, essentially, to give me some independence. And I was looking at everything at the time. I was sort of even going down all like renovations, developing sort of my own residential portfolio, and none of it really seemed to fit with me until I was lucky enough to watch a presentation on investing with what ended up being my mentor, Brad McFadden. And so he was giving a speech at sort of an investment conference about finding value in sort of bombed out, hated sectors. And that really clicked with me, because I'd kind of seen this as well throughout my career of how high the returns were if you're in hated areas, and the idea that I could actually search around the world and find these and sort of position myself to get lucky. Because this is a whole overlay with how I was thinking about time. Was like, I kind of want to be able to search out where the best setup is in the world, rather than with farming, you're just stuck on the outlook for that particular area. And I kind of saw it as I went, as I moved to Australia, as a lot of people were awfully wealthy just by being lucky. Like there could be some guy in his 20s that had gone into the fax machine industry and was a super hard worker. His career went nowhere. And there could be another guy that went into, say, the copper industry, and he managed to catch like the sort of the ramp in China, and he did very well for his life. And both of them were hardworking, smart people, but one just ended up in the right place. So I was like, I want my results to be a direct reflection of my hard work and where I position myself. And so what Brad sort of laid out, I was like, that makes all the sense in the world to me. And so, convinced him to be my mentor, and he's been my mentor to this day, like sort of over 10 years now. And
how'd you do that? How'd you pitch him to become your mentor?
Yes, so this is the hardest question, because I often get this now, is like, that's amazing how you made it work. How would I do it? And I was like, I honestly don't know how to even start, because the successful people don't want to mentor people because they're just doing well in their own right, and they don't want a job of educating someone else. And so I was lucky with Brad in that he was kind of thinking of operating a service, or was starting to operate a service that was helping people manage their own super. And so he was sort of working out a little mentorship program for that. And I came along at just the perfect time for him to kind of consider that. It was just luck, pure luck and timing, really. Whereas, I kind of feel sorry for people today, because it's often the people that promise the mentorship programs, they're just really good at marketing, and they're not actually very good at the underlying skill they're promoting. Because if they were really good at that, they'd just be doing it. They wouldn't be pitching it all day long. And so, I got very lucky with him, and that's turned into a real sort of friendship. I took on board all his lessons, and I think I met him when I was 24, 25. By the time I was 30, I handed my notice and quit my job and moved to Europe for a few years. I also had a few people I was managing, a few sort of high net worth clients I was managing their money for, and lived there, nearly 2 years. And then
Where in
came
Europe,
on
can I
holiday
ask?
it was Berlin. Yeah.
Oh,
My sister was
so
based
far.
there. And so,
Okay.
went and saw her, and then ended up meeting a girl, and was there for, another pretty much, 2 years before broke up and went on a holiday to Bali. And that's because my parents are also, they'd moved to Australia. So my sister and I flew to Australia and then said, let's have a holiday in Bali afterwards. My sister flew back, and I ended up meeting my wife here and never left. That's 7 years ago. A kid, a dog, a house.
Wow.
And got to a point I didn't need to manage other people's money, just managed my own. The cost of living was a lot cheaper here, and just really managed to compound it all and set myself up. And now really happy with my little corner of the world.
Well, that's a great story.
Yeah, I mean,
thanks for sharing.
The vibe you give off is very, it feels for me like a lot of contentment, right? Which I think is a great place to be. It's there's a little bit, of course, even if you're ambitious and you still have large goals to get to, you can still be in this place of contentment along the way, right? You always appreciative for all the, whatever you want to call it, the good fortunes, the blessings that you have. But what is I mean, how so I mean, you, thank you so much for the kind of the summary of your personal history. That's really cool. But so Bali chose you, it seems like, more than you chose it, but then it kind of worked out. But you were already in a place where you could essentially make a living with your trading account and internet connection pretty much from anywhere, right?
Yeah.
So that it's not something you figured out once you were there. You already kind of in that place.
No, I think I was going to say it's probably important to note that, before I actually quit my job, I was almost matching my salary from trading. I was doing a lot of sort of covered calls and income strategies in the markets. And for a period, they worked really well. They worked well from when I first started, they worked great for 3-4 years. And then it'll kind of a topic that comes up repeatedly. It essentially stopped working in a period, and I had to kind of reinvent how I kind of came at the markets. But for a period, I did really well just income trading, and it also fitted quite well with moving to Bali because it was a lot cheaper when everything stopped working, and I had to kind of sort of work out how I was going to make a living from there moving forward. When the capital gains side was fine, but living off capital gains is quite difficult at times when you don't sort of have the steady income. So there were certainly lots of ups and downs. If anyone thinks it's like a linear, clean progress, it's not by any means.
Would you say the current landscape we're in now is one that lends itself to selling calls for income?
No, I wouldn't. I think the landscape we've got at the moment is one where there's just some outrageous value and great dividends to be had that you don't need to get very aggressive with income strategies at all. A lot of people that sort of reach out, and I'm kind of point to portfolios you can set up now, which you don't really have to take much risk. Like I'm just thinking of a handful of coal companies that are paying out very healthy dividends. They're also buying back a percentage of their stock, and I see them sort of easily doubling in a sort of a 2-3 year time frame as well. So I think that's a lot more attractive than trying to do intricate sort of income strategies at this point in the market. Yeah.
So the first thing that you thrown out, and we're not really here to talk about specific, like, I mean, we're, of course we care which commodities and stuff you think are hot, but it's not really the main point of the conversation. But the first thing you throw out is coal, and it's clearly in the Western narrative, that's the no, right? We don't want that. That's bad. It's dirty. It's climate change. It's all the things. When you started really going out on your own as an investor, did you think of yourself as a contrarian right away, or was that kind of a journey?
I think it was definitely a lot of Brad's influence, but it was also, I always say, you got to find the style that fits with you as well. And Brad and I have a lot of similarities in that kind of both, say, like less volatile personalities, quite like takes a lot to get me worked up. And I think Brad's probably even more, takes him even more. And so I found whenever I did sort of more active short-term trading using stop losses, I'd screw it up. And so it just didn't suit me. I needed my personality and my kind of the way my makeup was that I needed to find something where I could do a lot of research, develop a lot of conviction, and really ride it for a long time. And that's where I've made the vast majority of my gains. I've had periods where, well, one jumps to mind where Brad, I think he'd been mentoring me for maybe 4 years, and I was really at the time into trying to work out how to make money with options on FX, on like currency, and I was spending like all day on it. And he finally one day he just said, "Ferg, like, bring up your profit and loss on your brokerage account." And I was like, "Oh, okay," and brought it up. And over the last 3 years, it was like, for all the time I spent on currency options, it was like 5% profit, and all the rest was just on the hated sectors where I'd gone in and bought something super cheap and just let it grind higher. And it was slightly boring. Once I'd kind of done the work, I didn't have to do any more, and I was just entertaining myself with this other area. And he's like, "Yeah, why don't you just spend more time on what's working?" And it's a constant thing he always says to me: "Yeah, just do more of what's working. Don't get distracted." And so that's what I've kind of based a lot more time around. I'm terrified of missing another kind of whether it's sort of a lift off in uranium, a lift off in coal. I just don't want to miss any of those periods where something goes from flatlining to taking off. Like an example at the moment would be like PGMs, the likes of platinum, palladium, rhodium, something that's kind of almost, call it like a dead patient, where you see the heartbeat go down to zero, and then you see the first sign of life, and you know they're going to get up again. You don't want to miss that first sign of life.
So do you typically wait for that first sign of life before you really deploy, or like how with something that's been flat for so long, how do you find the timing aspect, right? Because if you put it in too early, it might, you're just sitting there. So how do you manage that? Or do you put a bit in and then when you see it start moving, you put more in?
Well, the answer is like poorly until I've learned to do it better. It's definitely been a learning curve. There's some cases like uranium, I've sat in it for a while and had a rough time in sort of miners that dilute you. And others, you've got, like with offshore, I went in that early and had some that went bust. Lucky they were smaller positions. And then once you saw that bankruptcy cycle play out, it just becomes obvious. Once they clean up the debt, got a heap of assets, and it just was absolute screaming buys when they were relisting. That was kind of what I got known for probably first, was just sort of pointing at the value of a lot of these the sort of post-bankruptcy relistings, like how much value there was. So that was an easy sign. And then the rest of it is just kind of having a finger on the pulse of how hated something is and understanding where that thesis might be wrong. Like kind of an obvious one was coal for me, seeing how everyone hated it, yet it was pretty obvious the developing world was going to require it for a long time. Every bear case was sort of Western-centric, and that wasn't ever the demand story for it. And so it was easy to come to a conclusion there for me that, demand was going to be far stickier, and that a lot of the coal companies been priced for sort of death or terminal decline was going to be wrong. They were going to be around a lot longer, and that was going to be really accretive. And the likes of the Russian invasion was just icing on the cake for the whole thesis.
Yeah, I mean, for me, like living here in Germany, it was pretty mind bending for me to witness, right? Everyone going so anti-coal. Even the Green Party got into power, but then you just see coal consumption in Germany just keeps going up, right? So even when the poster child for green policies or anti-coal policies, you know, even if they're buying and using more coal, then yeah, what more the developing countries, right?
Yeah, I've got a great set of headlines. It's Germany. It's like Germany advises and lends to South Africa to get them off coal, and then the next one's Germany like 5x's coal imports from South Africa during the crisis, and then the next headlines, Germany seeks clarification when South Africa will get off coal. It's just the ultimate sort of hypocrisy. Yeah, it's again the idea that I think we've seen it now. There's a realization that you can't run economies purely on renewables. It's everyone's starting to see through it that stating capacity is highly misleading when the capacity factor of the likes of wind and solar is low, and it's an average as well. So there's points sort of in when you need power the most that you're going to have no wind and no solar, and so you need backup, and that is in the form of baseload, whether it's gas, coal, or nuclear. And Germany's just absolutely kamikazing itself when it closed down its nuclear power plants, and it's for everyone to see now with the likes of VW sort of closing plants down and saying the costs they need to decrease costs by 50%. It's you can pretend, you can kind of avoid reality for a while, but then industry can't avoid that reality. They're kind of getting eaten alive by China. So yeah, be interesting when a pivot happens.
The crazy thing is that in Germany still, and I know we don't need to make this about Germany because we talk about their crazy policies all the time, but
yeah.
My wife's American and her sister is just visiting, and she's like, so wait, why is gas so expensive? Like, we just drove by the gas station, you know? And I'm like, well, you know, many reasons, but more like, I think it's €1.65 for a liter, €1.65 for a liter. And 90 cents of that is tax, right? So it's like, and so the kilowatt hour electricity is about 40 cents right now, which is crazy, right? Like even island nations where it goes all off of diesel can beat that price. And yet more than 50% of that also is tax. So it's like, there's plenty of leeway. If Germany wanted to make their industry competitive, they could easily lower taxes on energy costs to make their heavy industry work. But apparently they just also really don't want to, right? So it's a very strange set of things going on. And I mean, of course, the energy underlying has gotten more expensive with shutting down the cheap Russian gas, but there's still many things you can do, you know. But yeah, so I think I don't know, there's so many crazy stories, right? Like the UK started importing coal from Australia, I think, because they don't want to have the dirty mining in their own country. And I'm like, it's a lot more green to ship this stuff around the world on a giant tanker, right? Or like they're doing wood pellets in Germany because it's so sustainable. And I'm like, yeah, of course, burning wood has a shorter carbon dioxide, whatever, regeneration cycle. But now we're buying chopped up trees from Canada and putting them on boats and shipping them around the world. Like it's just so freaking idiotic when you look at it at face value. But yeah, I think the best you can do is find these and try to make some money off the.
That's it. That's where I was going with this. You just want the other side of it. Every time I see, I was reading an article before about how Germany's going to completely transition to sort of a hydrogen grid, and I've read enough about that to know at the moment green hydrogen's 4 times the cost of gas, and you can't run it through the same pipelines that you use gas. You have to upgrade all the pipelines. So it's just that's just an absolute pipe dream. Yeah, it's just a non-starter. And so the longer you
Pun intended.
hold, yeah, pun intended.
That was a good one, Ferg.
Yeah. When I lived in Berlin, I remember how much difficulty they had even upgrading the current system, because whenever you dug up a street, you'd hit an old bomb. And so the idea, that it was just, like I find Germany fascinating. I find little Germany and California like that, and even Australia, just how they're sticking to it, whereas they're sticking to the sort of, we're going to be cut carbon by this much by 2035. It fascinates me. But then it's the other side of a lot of the trades I'm on. It's just like, may the stupidity continue, because there's going to be less capex going where it needs to, and all things equal, there's going to be more price appreciation and longer outperformance.
Well, Jason and I have a theory that even the energy suppliers love it, because essentially the more renewable you bring on, the more volatile the power market gets. And so with all the hedging costs, somebody makes money on the other side, right? So there's probably tons of energy traders that are like, this is awesome, right? We're printing money. I mean, of course, somebody's losing it, and that's the consumer, right? that's the side you don't necessarily want to be on, but it seems to be just like a perfect setup for like not regular Joe, basically.
Ferg, since you're on the topic, could you give it to some of my German friends gently, right? Why they still think solar and wind can work, right? And they say all you need is enough batteries, right? It's like such a simple end of pipe thing, like, the sun doesn't always shine, but if you've got 2 weeks worth of batteries, it'll be all good, right? So could you maybe let them hear it from your end, if that is something that's realistic or not?
Yeah, so I love this, because Germany's probably the worst place in the world to even attempt this. So if you start with solar, and a lot of my gripes with solar isn't so much solar, because solar does make sense in a grid in certain places where you have legitimately high capacity factors. Like, you can make a really good case for the likes of like a lot of the Middle East, I think Turkey, I think Mexico, where you can get in high into the 20s in a capacity factor. And the thing to note with a capacity factor is it's an average. And so if you're far away from the equator, you're going to have a big seasonal fluctuation. And so bringing it back to Germany, the capacity factor for all the solar is averaging about 9%. And so that's averaging 9%. So that's before you take in periods in the winter where you're averaging essentially nothing. And you have to try and manage that grid. And so how do you, that seasonal difference, which is, I believe in Germany, it's around 50% difference between peak summer and peak winter. So you can't store that. Like, there's no ability, even if batteries went to some crazy low, like there was an absolute breakthrough in battery technology, there still isn't going to be the obility to store enough to get you through that seasonal low and offset that. And you've also got, not to the same extent with wind, but you've obviously got periods of almost no wind, and that often goes hand in hand with zero solar, as Germany's found out recently. And so just managing that seasonal fluctuation makes it a non-starter. And this has been interesting. What we're seeing play out at the moment as well is Norway getting angry, because what I don't think a lot of people have understood, that Norway is essentially acting as the EU's battery between Norway, Sweden, and also France to an extent with their nuclear fleet. And so Germany for the last two decades was a massive exporter of power, and in the last 2 years it's gone to being a net importer. And the thing with that as well is there can be imports and exports, but it's also important to sort of distinguish between what's pushing power across the border because you've got a lot of wind and solar, and what's requiring it in the middle of winter when it's like an emergency and you need to import it. And that's when it needs to come from either from France, either from Norway's hydro, or from a mix of hydro and nuclear in Sweden. and they're getting frustrated with the fact that they're getting hooked into this grid and having to pay up in a big way with the sort of variable and far higher costs in the EU. And so the current party is talking about literally cutting off. If you want to look at the canary in the coal mine, it'll be Denmark, because Denmark at points in time has over 50% of its available power from Norway and Sweden. And so they're talking of cutting Denmark off, which is just, it's going to be crazy. And so, yeah, what this all boils down to is there's not enough baseload to go around. And Germany's been encouraging everyone else to follow their policy. So you've got an entire continent on intermittent power, whereas there's not enough to go around in periods of low sun and low wind. And it's just ludicrous that anyone ever thought they could run a grid on that.
Yeah, so I've spent a lot of time in Dallas, Texas. I went to school there, and also my business is there now. And what struck me when I went over there first in 2009 or something, in the summer, it gets incredibly hot. It's like 40 degrees and everybody's running AC 24/7. And under that strain, there would be, they call them brownouts or something. Like, they're not fully blackouts, but they will cut off power systematically to kind of preserve the overall grid. It's kind of what they need to do to manage the load at that point. And that was like, man, what is this? This is a third world country, like crazy. This would never happen in Germany. And it also honestly hasn't, right? Up until now. So now I haven't experienced it yet, but I've read headlines that it's started now, that they have to do these rolling blackouts kind of to manage the load on the grid now this winter. And I mean, man, as a German, and I'm also an engineer by training, although I would consider myself more of an American business-minded type engineer, but it just makes me incredibly sad, because I know we have the know-how to build a super stable, reliable, and also let's say environmentally friendly grid. I think that's exactly what we had, actually, until we started messing with it. And now we burn more coal than before. And it's gotten dirtier, right? And so, like, when you look at it face value without all the messaging, all the virtue signaling, there is no meaningful energy transition, right? So then what have we achieved? We've made power more expensive and ruined some perfectly good industries. That's about it.
Well, there's a bigger point with it as well, is there never was a transition. There's just an addition. Like that, I titled a post that just shows that if you want to look at the likes of China, which people hold up as a sort of look at how much renewables is building out over almost any period, you can bring up, and I think Our World in Data does a really good job of displaying this. They're putting more coal in than they're putting in renewables. There's been some articles that are a bit misleading that use capacity and say how that's higher than coal, but the likes of, if you dig into it, I think solar capacity in China, I had some data on that. I think it was up to 25 or even 30% solar capacity, and the generation was 3%. And so if you're just being so misleading using the capacity at any point in time. And so, yeah, the ultimate takeaway is we're going to keeping up with the demand in the developing world requires all energy sources, and whatever gets cheap is just going to be used more of. It's kind of like Jevons paradox. Like, you see this occasionally show up in the IEA's work, and they should know better than to say sort of efficiency is going to cause reductions of energy use. And it's not the way the world works. Whenever you make energy cheaper, you just use more of it. And that's why, even I think it was a week ago, Reuters came out that coal's setting a new all-time high, and it'll continue to for probably years yet. And just, it's inconvenient. No one wants to admit it, and it's just it's gonna continue until there is a real pivot. Like, there's some signs I look out for. Like, it'll be interesting when maybe it happens in Germany. There'll be a party that'll run on. They won't call it pro coal or anything. They'll call it pro business, and they'll when there's enough pain, they'll look to turn the reactors back on, and they'll probably and probably crank the coal to get prices down. Because ultimately, all sort of net zero and green policies are a luxury good, if you will. Like you can lead a country to ruin on sort of socialist policies like the likes of Argentina. If you give free healthcare, free education, free handouts whenever anyone moans, you can drag a country down for decades that way. You can't drag a country into ruin when you sort of put hardship on people and it shows up in their power bills and they can vote against it. And everyone wanted green policies when it was like a kind of like a free add-on, if you will. Like you could invest in an ESG fund and it outperformed and you got to feel good about yourself. But what we're quickly learning was that they were just stuffed full of tech stocks that outperformed, and it wasn't really anything to do with the value add of ESG. And now that illusion's disappeared, I think we're probably going to get the next. That is the fact that we do need energy, a lot more investment in it moving forward, and Farcoin and Nvidia aren't the only place you can be in the markets moving forward.
So shifting gears a little bit, Ferg, I really enjoyed that a lot. I got to read more of your Substack posts. But so just pivoting a little bit more to like the freedom topic. So living life in Bali, doing kind of what you love doing, do you consider yourself free?
Yeah, I do. I guess it came to a point when I left, I was by no means I got a lot of questions, people asking, was I part of like the FIRE movement? Did I just sort of save up $1 million and live off 4%? And that wasn't me at all. When I left my job at Ferg, I only had, I think it was just over like $250,000, like 250,000. I had to really make it work to survive and really build that. And it's only really in the last few years that I got really comfortable. Up until then, I was like really needing to put up great returns. But yeah, I really do feel like a lot more relaxed with my lifestyle, and I don't need to shoot the lights out anymore. And just like I guess it's also having a kid as well. I just want to spend more time with him. I get a lot of offers. Like I could go down the whole fund management, but then I know that would take me away from him. That would add a lot more compliance and admin to my life. And I like getting to spend all morning with him, train BJJ for an hour or two, have lunch with my wife, and often put my toddler down for his afternoon nap before I go and do work for a few hours, and then meet him back for a walk at 5:30 and spend the evening with him. Like I think hunting for millions for millions' sake is a bit silly at a point if you're really comfortable.
Yeah, I love it. Yeah, so I mean, you've kind of touched on the trade-offs, right, and sacrifices, but it seemed like you found. I mean, so the thing with the toddler, right? As soon as you figure out a routine that works, they change, they grow up a little bit.
Yeah.
But it's the best to be there for all of it, right? I mean, my older kid is only a year older than yours or something, so it's not like I have that much future sight. And then Jason's is what? Theo's about to turn 5.
Yeah,
is he already 5?
He just turned 5 in June, and my younger one just turned 2 in November. So yeah, it does. Like I spend all my time with my wife saying, okay, this is the routine. This is how we're going to do it. Master plan. Yes. And then 3 weeks later, something's shifted. Oh no, it's not 2 naps. It's 1. Or he's not sleeping in the pram anymore. He needs to be in bed or, so yeah, it keeps changing, but it's really, really fun. Right. And, I think all of us, when we think about kids, we just can't stop smiling. So I think to be able to be free enough to enjoy that and be present enough, it's so priceless, right?
Yeah, well, that's the first thing that comes to mind when you both say you've got 2. Is I was like, you're both far wealthier than me. I'm going to play catch up. I think that's the one thing that gets me really jealous when I see like the family photo of just a big family and they're all happy, and there's nothing better than being healthy and having a big loving family. That's wealth. Yeah. There's nothing higher up there. And it's something you can't buy either. Like I like the idea that like you can't buy a healthy body. It takes pain and work, and you can't buy a loving family. If anything, more money can detract it. Like I don't know how many billionaires have a true loving family. I'm going to guess it's pretty small, because the sheer fact of them aiming to be a billionaire has probably mean they've been devoted to their work and neglected their family to an extent.
Yeah, man, that's 100% true. I think, it's how you define wealth, right? And money, like that utility, when you have enough, where then you have enough, that next dollar that you're chasing for, that utility is just not the same anymore, right? But if you keep chasing those big numbers, at some point, yeah, something in your brain says, hey, I've got $2 billion to look after. How can I put my son down to bed, right? I can get a maid to do that or something, right? And then you start rationalizing while you're away.
And then Ferg, I mean, so you've also built and are still actively building your Substack following and, social media in general. How much do you have to balance between kind of your authentic private thoughts and beliefs versus what you put out in the world? Would you say there's a gap there? Is that a challenge, or is that pretty easy?
Yeah, I think I'm pretty transparent. I just put what I'm doing and what I'm seeing in my portfolio. I think it gives you power when you make mistakes in front of people and you just constantly say what a fuck up you are, and this is my latest fuck up and how I learned from it. I think there's nothing that annoys me more than the Twitter bros that have just like called every top and every bottom and done everything perfectly. Like this, I've got this one sort of investor that I love, Kevin Muir, and his tagline's all I bring to the table is 25 years of mistakes. You just hopefully you're smart enough to only make the big mistakes once and really learn from it. And that's how I try and approach my Substack. Is I just say, yeah, this is what I thought was going to happen. This is how I screwed it up, and this is how I'm fixing it. And overall, obviously I'm lucky because I've got Brad, who's an old hand. Since he was 20, he's managing the bank's money. So he had old hands all around him, teaching him as well. So I've kind of ingrained a lot of his principles that have kept me out of doing anything really dumb. But I still make a lot of, still can't help myself and do a lot of dumb stuff pretty regularly.
Well, I was watching this video where you were talking. Oh, sorry. Go ahead, Jason.
No, I just wanted to pull on that thread a bit more about the community. Like, do you find much value? Like, I'm just curious, right? Is it also a two-way thing where you get a lot from the community? Like when you put something out there, they come back to you with their thoughts, and then you get to learn from each other. Or how does that work with a community like yours?
Yeah, 100%. So this was like the secret of why I got so engaged with it. So I grew up with the kind of belief that because I'm off a farm in New Zealand, and like it was always a bit cringe doing anything on social media, and I really struggled to put anything out there. Like the idea of filming myself, I really struggled with that, and wasn't until like COVID I created a Twitter account and started just putting a lot of my thoughts out there on sort of investments I've seen, and got a lot of feedback. I was like, oh, I'm actually really enjoying this. Anything I was struggling to work out, like around the company, I just put it out there and I'd get feedback. I'd get DMs, and it put me in touch with some super smart people that helped me like improve my investment thesis so much. Like one in particular I'm thinking of, it's a lovely guy runs a hedge fund, or did run a hedge fund in New York, and I was struggling to figure out a business, like how much trouble it was in during COVID when it was just crashing. And he was like, okay, well, lay me out all your concerns. And I just laid them out to him, and he just worked through them one by one. And as a result, put a pretty significant sum on it. And that has just, that's been a huge returner for me over the years. So that one little example, and also having the time to go through everything he told me and really fact check it, go through all the filings, get in the weeds, and really build conviction, because in that that was rough. Like the one I'm thinking of at the time, I already had a position in it at 12 cents, and it got down to 3 cents in COVID. And then to really size it up, yeah, it's kind of when I saw my last buy order hit, I was just like absolutely grimaced and wanted to log into the account and go and sell it immediately. I was just, it's that old story of the best trades are often super uncomfortable. And yeah, I just got so much value from meeting people that keep really encouraging me. And Twitter was really special back then, because I think with COVID, everyone being locked aside, there was just massive engagement. I really haven't used Twitter for a few years now, but I built like a really big following really quickly, just playing around on it all day, because I couldn't go outside, obviously couldn't do much, and met some really interesting people, and even led into sort of a show I did with Crux, which was like a family office for a while. He just saw some of the stuff I was putting out. He asked me on for a podcast, and he said, "Oh, would you like to sort of run a show of you just chatting to other sort of fund managers or experts you can find?" And then that kind of snowballed, and the following I built off that, I kind of rolled into Substack in the end. And so that was all from just, it was actually literally a post-it note on the corner of my laptop, said like 10 tweets a day, like just put yourself out there and meet sort of people, because sort of investing or trading can be quite lonely as well, especially if you're just doing it day in, day out, staring at your laptop. Like I wanted to do it to build a community, and then it ended up sort of snowballing from there.
Okay, but so we talked to Doug Casey recently, and we asked him how to build a community, and he gave us the kind of the lecture of be, do, and have, right? And so basically having things like a community, it all comes down to the doingness of it all, right? You have to do something that distinguishes yourself, and then people will most likely be drawn to that because you've kind of walked the walk, right?
Yeah.
And it sounds like you were already doing the thing, and then you started sharing it and started talking about it and kind of leveraging it again to make what you were doing more interesting and make it better. But you were definitely already there, right? You weren't posting, "Hey, I'm going to move to Bali and become a full-time trader," 10 years before you moved.
Yeah, no, very, very true. Because we see that the whole time in Bali. There's almost a sort of running joke here that a lot of people move here, don't know how to make an income with a business. They become a coach to coach other people how to run a business. It's just this pyramid scheme of there's coaches coaching other people how to be a coach for a business. None of them have run a business other than the coaching. So it's slightly, yeah, it's hilarious. But no, you're right in that when I started, I wasn't seeking to grow the following or anything. I was like, this is like what I'm buying. Tell me why I'm wrong. It was pretty self-interested, really. I was just asking for help, and then when someone helped me, I'd like kind of put out my best idea at the time, and kind of add value back for the help I was getting, and then it just went from there. Yeah, I've always had lots of people reaching out and saying like, this is how you like market yourself and grow. Like even with my Substack, I get so many messages like, you're leaving so much on the table of not running a sale on Black Friday or doing this. Like, get away from me. You're taking away from me just writing a good post, which like doing a good post is all the marketing it needs to be in itself. Like if it's good, people will share it and it'll grow. If it's bad, then I don't deserve to have people even read it.
Yeah, focus on the value, right? And the rest usually sorts itself out.
Yeah,
that's good. That's a good rule, actually, right there. Do you have other? So when you do your investing, I mean, you kind of explained already that you have a pretty in-depth research process. So, but do you sometimes operate off of gut feel also, or is it always a data-driven decision?
I've got like a process I go through that's kind of largely taken from Brad, which is like search out. Usually start with a chart that's just sort of bottom crawling, like a chart that's really sort of just hated, just crawling along the bottom of the screen. Everyone hates it. One of the best things he taught me was John B. Templeton's maxim, and it was just that bull markets are born in pessimism, grow in skepticism, mature in optimism, and die in euphoria. And if you just hang out in that, hang out where there's absolute pessimism and really question the narrative. And it's pretty damn easy when it's like cyclical commodities. It'd be a lot harder if I was trying to look at some sort of technology or something. Like I'm not very smart with any of that. So I like to go in something that's pretty obviously cyclical and then do a lot of research and sort of, is the standard consensus correct? And like with like what we've talked about with Germany, like you're literally taking the other side of going to be able to run the world on wind and solar and transition to green hydrogen. Like I'll bet against that all day long. And I just want to find bets like that. Like a recent bet I had, a pretty sizable position is in taking the other side of like the EV trade, which is I think EVs, straight electric vehicles, are going to really disappoint, and hybrid vehicles are going to continue to surprise just because they're superior in almost every way, and that's going to require more catalytic converters. And when I went right down that sort of chain of what's the most unloved thing that's like priced for death, essentially, I found rhodium, and so buying physical rhodium as a play on that. And then when you do all the research on rhodium, you realize it's massively cyclical. It's had 4 or 5 bull markets in the last 40, 50 years. So you can buy a metal that can act like a junior miner, and so I love that in itself. And so that's the whole process. Is kind of finding a narrative that's wrong when you've looked at a chart.
So, really beginner question, right? When you say you do the research, do you spend most of the time on Google, or do you have Bloomberg, or where do you look, or all of the above? Or
so I spend a lot of time on Koifen. I always recommend it. It's I just use the free version. I think they give away an amazing amount for free. So I was like, just if anyone just plays with the free version, it's got so much functionality. It's amazing. So that's super useful. I use a lot of I love Finviz. Just using that, it's it gives a really quick scan of the market, and it's also got sort of a news aggregator, and then just read a lot, see what everyone's hating on in the markets, like what you just got to some of the best money making opportunities are like words like uninvestable, in terminal decline, stranded asset, bankruptcy. If you're hunting in that space and you can see that there's cyclicality in it, then probably not too far off finding a good setup and asking who you're taking the other side of as well, which is always I guess what I was just going over with the whole. I'm generally taking the other side of the whole net zero outlook.
So do you do the same thing with countries too? Like, for example, I've noticed I travel to China quite a lot for work. I've done so since 2015, right? And I'm really impressed with the place, like how it's run, how efficient they are, how hardworking everyone is, right? How no nonsense everyone is. But the sentiment when I'm outside of China, on China, is so negative. It's also just when you said uninvestable, that was the first thing that came to mind, right? Like I'm seeing something that's totally different from what the narrative is. And I was just wondering, as an investor, would you also look at investing in like a Chinese ETF, for example, or an Argentinian one or an Indonesian one, if you saw that there was a big difference in what you actually saw versus what people are thinking about that place?
Yeah, that was the most recent investment I wrote up, was investing in Chinese tech. Yeah, I love that trade. That's absolutely hated. When I mentioned that, I received the most emails I've ever received saying it was a mistake, which is honestly, I probably haven't got as much hate for that since I first mentioned thermal coal, which some of the posts I got when I put that up were, one of my favorite I actually put at the start of a piece was investing in thermal coal is the equivalent of like looting Jewish homes during the Holocaust. that was the first comment I got.
For real? You knew you were onto something then, right?
Yeah, just absolute hate. But no, with China, it's fascinating because like if you're an alien and you came down and you just got presented with the um, Chinese sort of tech companies and the US tech companies, and you weren't allowed to see the valuations, you'd assume they're sort of fighting over the same market share and would be getting similar multiples. And then if you looked at, say, you went about it like you weren't allowed to see the multiples, but you could come at it from different ways, like who's got the most internet coverage, and you'd see 5G with China, they're actually dominating the majority of the developing world. If you come at it with who's the biggest trading partner so they can push their requirements, you see it's actually China. And then if you took away the covers, you'd see the valuations, and handful of the sort of Chinese tech companies are trading at, like, I think Baidu's trading at like 50-60% cash on its market cap. It's just absurd. I like had a joke in the piece I wrote that was like I mixed in the likes of Baba, Baidu, Tencent, forgetting the other, and mixed them with some coal companies, and you couldn't tell the difference in the sort of EV to EBITDA valuations. They're just all muddled in. You could obviously see the difference if you expanded out the chart what they used to trade at, but now how cheap they've got. And yeah, I want to be on that as sort of a potentially a really long-term trend. And the more people that sort of hate it, and the more they can articulate their arguments against it, the more I think it's priced in, because everyone kind of understands it. Like I made the point within the piece that there's take like the forgetting which world indices I used, but they've got an allocation of 2.6% to China within this world, their sort of world allocation, and they've got 67% to the US. And within that 67% to the US, there's I think it was nearly 20% is just in the 10 US big tech stocks, and 1.5% is Tesla alone. And then I go on to compare the likes of BYD to Tesla, and I think BYD is a superior company, trades at 25 PE. Tesla trades at 100 and some PE. They've got access to a far bigger market in the rest of the developing world, which is where all the growth is going to be. And then you realize that China's been valued in that particular index like literally 2 Teslas. So you get all the entire space for almost nothing. It's like the likes of Nvidia's almost 2 Chinas, which is just it's just absurd. And so I want to be there, and I want to own that for the long term, for when sort of some form of logic returns. And I obviously went into just how hard it is for a lot of the Western tech companies to grow into their valuations. Like the likes of Nvidia, its average analyst thinks it's going to grow its earnings 140% next year, going to grow at another 40-50% the year after. And if you look at the headlines, they're having to cut costs to try and compete with Huawei. And again, back to my point that I think Huawei's probably more competitive than them across the developing world. Like, where are they going to grow that 144% when they've got they've got cutthroat competition? Yeah. Anyway, I could rant on this stuff for hours.
No, but it's
what if they somehow don't have access to TSMC's manufacturing capabilities anymore, or I forget what this company's called, ASML out of the Netherlands, right? That makes the only machine in the world somehow that can make these nanometer scale transistors and whatever.
China's already caught up. China's already like their latest smartphone was
the
very
Huawei,
close.
Right? The 90, I think, the Pro 90. I think they use like a Kirin chip that was totally developed only in China.
Yeah.
Yeah,
and their latest output with the I think it's essentially equivalent to Nvidia's top latest product as well. So, which is just, Huawei is a fascinating company if you just dig into it. It's like kind of like, I'm assuming you guys came like through the sort of Apple innovation period, whereas every year you got your new smartphone, which had some like mind-bending new addition, and now like all you get is like another megapixel on your camera or something. Whereas Huawei, you get like that trifold. Have you seen that? Like just looks like a normal smartphone, and just pull it out and it turns into a perfect tablet. It's nuts. All like BYD with their latest vehicles, like their Seal can do 2,100 Ks on a tank and a charge. The the 4-wheel drive can float and do a 360 on the spot and park sideways. It's just and the price point as well. It's just absurd.
Yeah,
I think I mean, China's. I think they've absolutely earned their current position. They've put in so much hard work and so much time, so much learning curve, right? And I think the next decade or two is just their decade. And I don't think that anybody in the West really has a right to be upset or jealous, because we've made it so in a way, right? US has outsourced all the manufacturing to China for so long and somehow did it before some short-term gain, and now they're better than us at doing this stuff. I'm like, well, duh, what did you think was going to happen? You taught them everything, and now of course they've built on top, right, with their own culture of extremely hard work and like massive belief in education, and so naturally they're going to take it and run with it. But we've enabled them to do it, and now to be kind of blaming them, I think is so dishonest. Instead, I think everybody should be looking at how to partner with them, and because I do think that that's possible, right? I don't think that they're authoritarian in the sense that they come in and say, "Oh, you have to do what we say." It's like, no, we have some tech, you have some tech. Let's do some cool stuff together. I think they're overall much more open to it than many other countries that pretend to be the beacons of freedom in the world, So,
But I don't know if that's going to happen anytime soon. Something I still do when I read like articles in European, like even articles where you have like sort of arguing how much trouble German industry is. There isn't any argument that they need a reverse energy policy. You'll still find a section in the articles like in the same point as saying how much trouble the German industry in, but we've still got to meet the carbon goals. Still got to accelerate the requirements to meet. Yeah. And until that's realized, I think one of the funniest exchanges you can find was the Raytheon. I think it's the second or third largest defense contractor in the US, saying if they could disentangle themselves from their Chinese suppliers. He said it's not possible. And then the journalist followed it up with like, so you're saying that if we get into a war with China, our outcome would depend on if they decide to supply us?
In my opinion, the idea of the US going to war with China or even fighting over Taiwan is not going to happen. I think China can literally pull the plug on the US at this point. And it's across multiple industries. It can be pharmaceuticals, it's steel, it's semiconductors, it's tons of stuff. And even the talk with Trump, love him or hate him, whatever, but the talk with being tough on China and putting up all these tariffs, I don't think hardly any of it is actually going to happen, because they're going to strategically just say, oh, if you do this, we do that. And I think they're going to have the long stick, right? China is. So it's interesting. But yeah, so anyway, but all that aside, finding but the only problem that I see with the investment thesis for Chinese stocks, I guess, but maybe I don't know enough, because like, where do you trade them? Because I think China has made a decision consciously to not want a US style stock market, right? I think so. I don't know. I just don't know if it'll ever have that same liquidity, the same like boom and bust cycles. But how do you see that?
There's one assumption there that you're saying it has to be sort of US liquidity to drive it as well. Like, you can have it just from the Chinese themselves. They've got massive savings. The Chinese are huge momentum traders, so they do whatever's working, and they've been in property. Like, you'd see the breakdown of Chinese asset ownership, and it's majority property, and they'll get behind whatever the government wants them to ultimately. And the recent announcements is going to be sort of moderately loose sort of policy, and they're going to favour industry it wouldn't surprise me at all to see just more and more of those Chinese savings flow into their own sort of domestic champions, and so that alone is kind of make it pretty attractive. And then from there, that outperformance will just attract more flows. Yeah, it often doesn't pay to be too smart to think where the money will come from. It's just is it so cheap that it needs to start to revalue, and the outperformance alone will mean more money will flow in time. There's a lot of stuff that people say they'll never touch, but they will as soon as it starts outperforming. Sort of most fund managers have a very short memory. It's been surprising with Australia, even sort of talking they'll never ever touch coal, and now a lot of the met coal companies are already making their way into sort of super funds and stuff. So it's they'll have a very short memory when something starts really running, and they'll justify it in some way.
Yes, I mean, similar to what you touched on earlier, ESG was the hot thing, and now definitely it's tapering, right? And for a while, everybody was saying, "Oh, you won't be able to invest in anything that doesn't have an ESG whatever rating," and now it's already like, it's not working. Yeah, okay. No, that's good. That's a good answer. So thank you for but it's something I just also don't have that much experience with. So it was an honest question. But I mean, you're right. You don't need US style liquidity that kind of floats stuff even beyond reason, right? To these massive multiples. That's also not what you want.
There'll also be a rush for what's working when, like, I've got this whole theory around kind of like passive flows. Like how has NVIDIA got to 3.5 trillion? And a lot of it is just passive being sort of give them $1, they'll invest it. They're not sort of doing any valuation modeling. They've just got to invest it. So however many cents of every dollar goes straight into NVIDIA. And that works great when you've got sort of positive flows. But as soon as you need to rebalance, say inflation picks up and energy needs to go from, I think it's 3.6% of the S&Ps or maybe 5, maybe 6%, then it needs to rebalance. And that means some of these tech stocks need to be sold. Who's going to be there to take them off when passive has now become such a big chunk? Active's been absolutely crushed. Active is sure as hell isn't going to be standing around trying to take NVIDIA off a passive of the likes of Vanguard and BlackRock at 3.6 trillion. They'll be busy buying whatever the index is trying to rebalance into. And so it'll be interesting how that works, because there is no plan for how to unwind some of these big passive holdings. And we've never had this before where sort of the passive sort of holdings got to this size. So that could be some real sort of some real big air pockets or something. Yeah, I don't even know what that looks like, but don't need to when I'm hanging out in coal stocks and stuff.
Yeah, it's a problem maybe for somebody else to figure out, hopefully.
Yep.
We've rounded out an hour, and I want to be respectful of your time and still have a little bit of time for a rapid fire. Jason, do you have any other burning questions left for Ferg?
I mean, I think I could talk to Ferg all day, right? But maybe for now, I've asked quite a few questions and I enjoyed the answers. So
I just wanted to ask you, you kind of touched on it, but I've been staring at your very well built neck this entire time. So BJJ is clearly one of your passions, right? You said you like to train once a day pretty much, or?
Yeah, more or less, to my wife's chagrin. She says it's an addiction. I don't disagree with her, but I think it's one of the healthier addictions to have. Yeah.
It's for sure a healthy addiction. But so, and you said in the beginning, your natural disposition is you don't really get worked up. It takes a lot to get you worked up. How much of that is also from the BJJ training? I've done a little bit of MMA, but I've rolled like 3 times in my life. I think that's about it. But I do know that, once you get into martial arts, it tends to make you even more calm, because now you know what it feels like to get punched in the face, right?
Yeah. No, certainly. Like I've had 4 professional MMA fights, and decided I didn't want to get punched in the face that much more. Just keep my brain intact. I didn't want to make it a profession. So yeah, it's been BJJ ever since. But I think it's super important because I've always been a bit kind of overactive, and I find if I wear myself out in the morning physically, and I can't think about anything else as well. So I can't, if I'm getting annoyed with the markets or where a position's going, when I go on the mats, like it's kind of meditation as well, because I'm trying not to let some big Russian kill me that morning. And it's also kicks off another sort of problem solving part of the brain. Like I often joke with my son whenever my wife like opens my YouTube and clicks, it'll just be just lots of searching for how to get out of a triangle choke, how to get out of a armbar, how to, like, it's all I watch on YouTube. It's just even my little guy, he's just constantly like watching it with me now. So I'm a pretty simple human in that I like investing and I like BJJ and like spending time with my kid, and that's pretty much it. And I love the fact that if markets are frustrating me, I can just focus far more on the BJJ for a while just to take my frustrations out, because you can't really do much it's not like a kind of a business. You can, if something's not going well, you can just work harder, whereas markets don't work that way. Like, this year's been a good example of it. It's just been tough being a value investor. I've just watched, I was up 50% at the start of this year, and then just watched it all drain away throughout the year, as just every sector, whether it's offshore, coal, uranium, has all just lost a few percent a month through to the end of this year, where it just fell off a cliff. And so doesn't change the long-term outlook. It's just frustrating seeing the prices not reflect what I think the long-term fundamentals are. So yeah, going and beating up a few people on the mats helps relax me and come back to the screen with more of a calm mind. Yeah, the only problem is that these don't stay in as well anymore. I've got to constantly adjust them because my ears are getting a bit cauliflowered, which my wife hates as well.
Good stuff, man.
That's good. That's good. Okay, so this is part of your process, right?
Yeah.
You endure the volatility with putting some actual physical volatility in your life, basically. It's a lot easier that way.
Yeah. And it's a great way to just, I never enjoyed sort of going for a run for fitness or lifting weights. Like, there's nothing better than having kind of, I always call it like physical chess. Like, I'm just trying to beat some other guy, and we both kind of see their move, and then do you know a counter to that move, and do they know a counter to your counter? And it's I find it engaging in that way. So no, I love it. I'll bore you for hours talking about it if you let me.
And there was one of the trainers where I trained for a little bit in Dallas. She said, yeah, BJJ is the best because you can do it till you're 70 or 80, right? There's not really, it's incredibly physically demanding, but it's not like basketball that'll blow out your knees or something like that, right? You can always find somebody who's kind of at your level and keep doing it. So I think that's also really cool. It's not like a high impact sport that you can just like blow yourself out. So I think that also fits with your general outlook. You might have different experience. I don't know. Maybe the Russians are more intense.
We do. Yeah, there's a lot of injuries. I'd be lying if I said it was just a low impact like ping pong or something. I blew my ACL last year in 80cc run up. So that wasn't great. And my profile photo I recently had like a fight. I've like broken both fingers. So I'm not by no means an example of it being injury free.
All right. Well, you guys go a lot harder than I guess then. That's good. Well, know your own limit then anyway.
Yeah. Some of it's probably my personality as well. Yeah. Don't know when to stop.
Right, well, on that note, we'll stop this right now. Thank you so much, Ferg. It was a pleasure. I hope this was only the first of many conversations, because genuinely could keep going on many of these topics for days, basically.
I'd love that. Yeah, that was a great chat.
Hey, yeah, so this is where we cut it off, and all three of us completely spaced on giving Ferg a chance to plug how all of you can follow along in his trading adventures. Simply, it is traderferg.substack.com. Traderferg is one word, .substack.com. I've become a paid subscriber myself recently, and I find the articles he sends out incredibly valuable. There's a great balance of just densely packed information, an incredible amount of really good memes, which I think is like one of his secret passions, and very, very interesting, well broken down, easy to understand information about what he's trading and why. So yeah, highly recommended you check out traderferg.substack.com.